Hello, everyone. Welcome to another episode of our weekend series dedicated to price action based technical analysis. In today's session, we will be delving into a follow-up illustration on the XAUUSD chart, exploring potential opportunities as gold prices settle around the psychological $2,000 zone after testing a record high at the 2,140 during the previous week. Last week's trading setup presented great trading opportunities despite missing out on the impulsive leg that hit the 2,143 zone. We capitalized on the sell-off and rode the bearish momentum, yielding over 800 pips after overcoming some couple of losses from in between long positions during the week. Congratulations to those who joined us on this profitable journey. In fact, well done to you. If you in any way missed the daily commentaries on this asset and want to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you are watching on my YouTube channel. Now, with the immediate reaction to the upbeat US November jobs report, which saw the US 10-year benchmark note rise by 4.3%, resulting in gold price declining towards the $2,000 level at the end of last week, with the reports showing that the labor market is improving in contrast to recent data, how will gold prices fare in the coming week? Well, as always, we will be dissecting the current market structure from both technical and fundamental perspective, utilizing tools such as trend lines, key levels, and chart patterns to unveil the potential trajectory of price action in the days ahead. Before we proceed, I want to emphasize that this video is for educational purposes only and should not be considered financial advice. My aim is to provide insight into the XAUUSD chart, enhancing your understanding of price action analysis. Always remember, Forex trading involves inherent risk, so exercise caution and consider consulting a professional financial advisor before making any investment decisions. With the groundwork laid and with no further ado, let's delve into the details. As we run through the daily chart, it becomes apparent that we are at a crucial juncture in this market. Price action has retraced back to the psychological level at the $2,000 zone, which has historically played a significant role in dictating the direction of price action. Now, if we go to as far back as this to 2020, you'll see how that level around the $2,000 area had played a significant role in pushing price to the downside, as you will see here. Look at what happened here. We saw selling pressure around the $2,000 mark here. Then somewhere around here again during the early month of this year, we saw selling pressure, and look at what had been going on here. And in fact, in recent times, we saw how that area was serving as a selling niche before that level was broken to the upside. Now, as back price action is now back into the $2,000 level, this level for me holds paramount importance for the upcoming week, as market participants' reaction here will undoubtedly play a pivotal role in shaping the trajectory of price action. Now, with the situation we have right now, the question is, will price action breach the critical $2,000 level, that is, break it, retest it to the downside, triggering a potential bearish move maybe towards the descending trend line identified here, or will buying pressure persist above the $2,000 level to pave way for a uptrend continuation? Well, the future remains uncertain at this juncture, but I have identified a straightforward trading setup on the 4 hours time frame that we will leverage on to position ourselves for the upcoming market movement. Before scaling down into the lower time frame, I want to acknowledge how the recent positive US November job report and its consequential impact on gold prices highlight the influential role of fundamental factors in shaping this particular market. Moving forward, we will want to highlight and closely monitor key fundamental drivers that are likely to impact market sentiment in the upcoming week. Now, by monitoring the economic calendar, we aim to pinpoint potential correlations between critical economic releases and specific technical patterns on the charts. Now, on the economic calendar and based on the asset we are looking at, we shall focus on high impactful event coming in from the United States economic docket. Now, for this week, the first high impactful event is coming in on Tuesday, December 12th, which is the Consumer Price Index, a data that measures and examines the average change in prices paid by consumers for goods and services over a specific period of time. Now, on Wednesday, December 13th, we look forward to the Producer Price Index, which exclude food and energy. And this data measures the average change over time in the selling prices received by domestic producers, excluding the volatile food and energy sector. Now, on that same day, we look forward to the highly and most anticipated event, which is the Fed's interest rate decision, the outcome of the Federal Reserve meeting where they decide whether to change or maintain the current interest rate will be on everyone's radar for this week. Then moving on, we have the monetary policy statement, which of course will be giving us a comprehensive assessment provided by the Feds, detailing the economic conditions, outlook, and the rationale behind monetary policy decisions. Then later on Thursday, we look forward to the retail sales data, a key economic indicator that measures the total receipt of retail stores representing consumer spending in the US economy. Then lastly, on Friday, we are going to be witnessing the S&P Global publication, a prominent financial service company known for providing credit rating, research, and analytics of economies. Now, we are going to be looking at the manufacturing PMI and, of course, the services PMI as well on that same day. So you will see that this week is jam-packed with a series of high impactful events that will definitely be affecting market sentiment, which in the long run will reflect on the chart as price action. Now, talking about price action, let's delve deep into the 4 hours time frame where I've been able to identify a simple setup that we will be using to guide our decisions for this week. Now, on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the beginning of the month of November. And right here, the first thing you will see is that the $2,000 level, which we identified on the daily time frame, remains very much intact, as you will see right here. Okay, I'm sorry about this. I think I need to make this a little bit clearer. Hold on a second. Okay, then I give this a line color and bolding. All right, so you will see how the $2,000 level has played a major role in determining the direction of price action since the beginning of the month of November. Look at what happened here. This level was a strong selling niche at some point. Look at what happened here. Selling niche during the first week of November. Price action was selling around that same area as well before it was finally broken during the last week of the month of November. And since then, price action has traded above this level to emphasize the strength of the buyers. Now, price action is back into that $2,000 level right here. Now the question is, will this level become a platform for new buying opportunities, or will this level be broken to the downside? Now, in addition to this key level, is that important, hold on a second here, it's that important ascending trend line I was able to come up with after connecting the series of higher lows since the beginning of the month of November. And in fact, I have a couple of ascending trend lines here. Now, these trend lines here further emphasize the strength of the buyers. And right now, if you look at how price closed last week, we have a little bit of a breakdown of that ascending trend line, as you will see right here. Now, the question at this juncture is, will the breakdown of this ascending trend line turn out to be a true breakdown or a false one? Now, to confirm if this is going to be a true breakdown or a false breakdown, well, we want to see price action continue to trade below our key level, maybe a retest of structure to feel comfortable selling the XAUUSD, as a breakdown of this ascending trend line will confirm that we are back within the seller's territory, which is exactly below that $2,000 level we identified on the higher time frame. However, if price action at the beginning of next week climbs back above the ascending trend line and we begin to see the reemergence of buy pressure above the structure, this will be a good opportunity to join an uptrend move. So this is how we are going to be managing our positions for the upcoming week. And of course, you would agree with me that we are at a crucial juncture at this point in time, as depending on how market participants react to the structure will determine what our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and all other platforms to give you updates on how we are going to be managing our positions after monitoring how participants in the market react to this current structure during the early hours of the new week. If you have found this content helpful and useful in making your independent trading decisions for the upcoming week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find this material beneficial to them. Thank you in advance for doing so. And if you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos and commentaries. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye.